Have you noticed your parents or grandparents obsessing over gold prices lately? Gold prices have been soaring, hitting record highs in recent times. In fact, just a few days ago, the prices of gold crossed staggering 7,600 per gram in India. This chart shows the price of gold. See the peaks? They happen during times of economic trouble like recession, low interest rate and falling stock markets. But look at what's happening right now. Gold is hitting a historic highs even though the economy is doing pretty well by most measures. Gold is much more than just a pretty decoration. It's a valuable commodity that plays a crucial role in the global economy. And when its prices start surging, it's a signal that something big is happening in the world of finance and economics. But how does gold price actually increase and why should you care about it? In this video, we'll go deep into the factors that drive the demand for the gold, the impact of global events and how all this affects you and me. This is a quick video, so watch till the end. Let's start with one of the biggest reasons why people turn to gold when times get tough. Its reputation as a secure investment. You see, gold has long been considered a hedge against economic uncertainty and inflation. When stock markets start to tumble, currencies fluctuate wildly, or political tensions rise, investors turn to gold as a reliable store of value. Think about it this way. If you had all your money invested in stocks or real estate and suddenly there was a financial crisis or a major political upheaval, the value of your investments could plummet overnight. But Gold has a way of retaining its value, even in the midst of chaos. In fact, during times of crisis, the demand for gold often skyrockets as investors seek to protect their wealth. Now, let's take a look at some recent global events that have contributed to this surge in gold prices. Tensions between major world powers have been on the rise.
And today, Israel has struck a UN-linked school in central Gaza. It was housing displaced Palestinians. 40 people were killed. More than 70 are injured.
Is clarifying how Ukraine can legally use American weapons to strike Russia.
The Russia-Ukraine war is venturing into perilous and unprecedented territory as France is contemplating the deployment of its military personnel to assist Ukrainian forces.
And this has had a significant impact on the gold market. The ongoing conflict between Russia and Ukraine, for example, has caused a widespread impact on global economies. Sanctions imposed on Russia have disrupted energy supplies, leading to soaring oil and gas prices. As a result, investors have sought refuge in gold, driving up its demand and consequently its prices. But that's not all. The strained relations between the US and China, two of the world's largest economies, have also fueled uncertainty in the markets. Trade disputes, technological competition, and political posturing have all created a feeling of uncertainty, further boosting the appeal of gold as a secure investment. Speaking of uncertainty, let's talk about the elephant in the room: inflation. In recent years, we have seen inflation rates spiraling out of control in many parts of the world. From skyrocketing food and energy prices to rising housing costs, the cost of living has been a major concern for households across the globe. Now, when inflation is high, the purchasing power of traditional currencies tends to decrease. In other words, your money isn't as valuable as it used to be. For example, if you could buy 10 items for 100 rupees before, now you can only buy 8 with the same 100 rupees. This is where gold comes into play. As a tangible asset with a limited supply, gold is often seen as a protection against inflation.
If you took all the gold that was ever mined, you could fit it into a building that's about 7 stories high and about 5,000 square feet. That's it. There's no CEO of gold. Nobody can manipulate it. It has its value just due to its own properties, due to its own, rarity.
But wait, there's more. Central banks around the world have been struggling with the challenge of controlling inflation.
But a war against inflation. Global inflation seems to have turned a corner. Inflation rates are falling in the United States, in the UK, and also in the Eurozone.
while the head of America's central bank has warned that inflation is a severe threat to the US jobs market.
To fight rising prices, they have been raising interest rates, which can impact various sectors. When interest rates rise, the appeal of stocks and bonds may diminish, as the returns on these investments become less attractive. In such scenarios, investors often turn to alternative assets like gold, driving up the demand and consequently its prices. Speaking of currencies, it's worth noting that the weakening US dollar has also played a role in the surge of gold prices. You see, gold is priced in US dollars globally. So when the dollar weakens against other major currencies, it becomes more affordable for foreign investors to purchase gold. This in turn increases the demand for the precious metal, pushing its price higher. Conversely, when the dollar is strong, gold becomes more expensive for international buyers, potentially decreasing demand and putting downward pressure on the prices. So, if you have been keeping an eye on the foreign exchange markets, you might have noticed that the US dollar has been on a bit of roller coaster ride lately. And as it fluctuates, so does the price of gold. Now, let's talk about the good old supply and demand equation. Like any other commodity, the price of gold is heavily influenced by its supply and demand dynamics. And in the recent times, we have seen some interesting developments on the both fronts. On the supply side, gold mining operations have faced various challenges, from environmental regulations to labor shortages and rising production costs. These factors have made it increasingly difficult for miners to keep up with the global demand, leading to a tighter supply of the precious metal. At the same time, we have seen a surge in demand from various sectors. Jewelry, of course, remains a major driver of gold consumption, particularly in countries like India and China, where it holds significant cultural and social significance. But it's not just about jewelry anymore. Gold has found its way into a wide range of industries, including electronics, dentistry, and even aerospace. As technology advances and new applications for gold emerge, the demand for this versatile metal continues to grow. Now, if you thought individual investors and jewelry buyers were the only ones fueling the demand for gold, think again. Central banks around the world have been on a buying spree, stockpiling gold reserves at an unprecedented rate.
Gold is having a moment. The buying price of gold futures has hit multiple record highs this year.
Switching tracks now, gold prices have hit a record high. How uncertainty has impacted precious metals. We're talking about gold and silver rates.
Currently has more than $3.2 trillion in forex US dollar reserves, as opposed to gold, which is only 4%.
Check out these stats. United States currently has the largest gold reserves, a massive 8,133 tons. Germany, Italy, and France follow next. India is in 9th place with only 803 tons of gold reserve. You see, central banks hold gold as a strategic asset, serving as a hedge against economic uncertainties and means of diversifying their foreign exchange reserves. While we are on the topic of investing, it's worth noting that gold has become an increasingly popular choice for portfolio diversification. You see, traditional investment vehicles like stocks and bonds can be heavily influenced by market fluctuations and economic conditions. After all, gold has historically demonstrated a low correlation with other asset classes, making it an attractive option for those seeking to diversify their investments. Finally, we can't overlook the role of investor sentiments in driving gold prices. When economic uncertainty comes into view, fear and anxiety can take hold, fueling a flight to safety among investors. In such times, gold's perceived safety and stability become even more appealing, leading to increased demand and consequently higher prices. It's a classic case of human psychology influencing market dynamics. Well, there you have it, folks. From geopolitical tensions and economic uncertainties to supply and demand dynamics and investor sentiments, there are numerous factors at play when it comes to the surge in gold prices. But here's the bottom line. Gold has long been a reliable, safe place to invest, a protection against inflation and a way to diversify investment portfolios. And as the world navigates through tough times, it's no surprise that the demand for this precious metal has skyrocketed. So, the next time you see your grandparents obsessing over gold prices, remember that they are not just being nostalgic, they're keeping a close eye on the global economic landscape and making strategic decisions to protect their wealth. As for you, It's never too early to start thinking about your financial future, whether you decide to invest in gold or explore other options. The key is to stay informed, diversify your portfolio, and make decisions that align with your long-term goals. And who knows, maybe one day you will be the one obsessing over gold prices, passing on the wisdom of investing to the next generation. If you enjoyed this deep dive into the world of gold prices, be sure to give this video a like and subscribe to the channel for more informative and entertaining content. And as always, feel free to share your thoughts and insights in the comments below. Until next time, stay curious, stay informed, and may your investments shine as bright as gold.